view?
Yeah, gold in some respects has been behaving in a manner similar to those long-dated government securities as as a risk-free asset, and the intellectual case for gold is very strong. Yeah, governments are now printing money, and only God prints gold. And it takes him 1 billion years. He's kind of slothful. So there's a kind of scarcity argument in terms of gold versus US dollars. The problem is that's well articulated, well understood, and the vaults in places like Geneva are heaving with the stuff. I mean, you literally cannot get any more gold in. And what we're seeing just now, of course, is this, again, rally where people want to take risk again. When you want to take risk again, you kind of don't want gold. So one would hope that we could see a further correction in the price of gold, possibly down, I might fantasize, but maybe $600 or $700 an ounce. And I'd be very curious about it at that point, and I'm sure I'd be trying to buy some. I'm not saying it'll happen, but stranger things have happened. I keep mentioning the fact that gold halved in value, or price rather, from $200 to $100 between 1974 and 76, before going to $800. So we have to expect the unexpected when it comes to gold.
But the thesis is it's going higher, but ultimately it'll only do that after we've had that pullback, you believe?
Yeah, I don't know a bull market that goes higher which has everyone invested. It has to, again, it was a well-articulated and understood concept in the mid-1970s. Nixon had come off the gold window. Gold had gone from $35 to $200. It's kind of the same thing. We've gone from $260 to over $1,000. We're printing money. We've got Bernanke. It's all the same thing. And yet for 2 years, gold halved in price and gold shares were destroyed. So that's the type of thing that shakes your conviction. Gold's kind of had it easy. Gold investors have had it easy. You pick up the Financial Times, the Wall Street Journal, it tells you you're a genius and you're making money. That's not how I understand making money. So I'd expect gold to kind of get a bit more uncomfortable for the people who own it in the short term.
Hugh, there's a lot of confusion, I think, about the effectiveness of QE, and I'm interested in how you see this. I mean, on the one hand, people are telling me we can see debt in the UK in aggregate rise to 250% of GDP, and that's okay, and we don't have to be overly concerned about the current levels that we're at. What is the right answer?
Yeah. Okay.
How do you see it?
Your figures there are a tad too high. Yeah. There's a fear of hyperinflation, and hyperinflation really is a sovereign debt default, and that happens when the debt level versus GDP, the government's debt, gets out of hand, and 250 would be out of hand. The UK got to 250 fighting the Second World War, so that's an extraordinarily high figure.
Sorry, the timing's wrong.
Timing's wrong.
It was a great question, and it would be wonderful to hear the answer, but we've run out of time on today's show. So we'll have to get it next time, won't we? Or maybe you can write it down and I'll put it on the web address. Let's do that. That was Squawk Box, everybody. We'll see you tomorrow. Thanks for tuning in.
Healthy Horizons in association with Philips.
Hello and welcome to Washington, D.C., where we've come for the 6th Annual World Healthcare Congress. This year the conference included over 1,500 thought leaders